Hey, Tony.
Hey, Jim.
What animal don't tax pros play poker with?
I don't know, what animal?
A cheetah!
Oh, my God. He's so tall now. Hey, Tax Pros, welcome back to another edition of TaxProTalk or hashtag TPT. I'm Tony.
I'm Jim.
And it has been a slow start to the season, but not to mean that it hasn't been a busy time for everyone out there. We've been getting a lot of questions, Jim, centered around that QBI, that qualified business income deduction that everyone's wondering about. So we want to share a few insights, updates of stuff we've been working around and hearing as well.
Yeah, absolutely. I think QBI, everybody's excited about it. There are tons of questions. It seems to be slowing things down. IRS announced after the first week of e-file that we're about 20% behind where we were this time last year. So definitely everybody's moving a little bit slower to e-file, which is okay. There have been tons of updates to the programs. We've heard some feedback about a lot of updates in the program. That's because there have been a lot of changes, regulations, things like that. So we're going to be talking about all of those things during this episode. I was joking with Tony earlier, maybe we should call this the QBI show because it seems like each week we keep getting deeper and deeper in qualified business income deductions.
That's right. Well, we're doing some things to help out, Jim. We're making some videos that we want to share with everyone. We're showing some stuff in product around where to do certain input, how it calculates some of the worksheets. Jim, myself, Robbie, Randall, as you guys will meet here soon. We've been making a lot of educational videos for you, our tax pros, so you understand QBI as much as we do, or can understand as much as we do.
Absolutely. You can find those when you search in the help for qualified business income, and you get to those main articles that have a lot of different sub-articles on them. We'll have those videos in there for each product that'll tell you how to do the inputs to generate those worksheets, including, we've heard a lot of questions, how to make certain activities aggregate. And again, you as a tax professional need to understand the rules of aggregation, which business activities can be aggregated. Remember that SSTBs can never be aggregated. And the other activities that can be aggregated need to be similar enterprises. But if they can be, and you want to, it shows you in there how to do that. So you'll want to refer to those videos. Those will be helpful.
Yep, and hang in there, tax pros. We're in this thing together. We will get through QBI.
Yep. As most of you know, there were some changes that came out. IRS released some new regulations that said for the 1040 and for self-employed income, you now have to deduct 1/2 of the self-employed tax, self-employed pensions, self-employed health insurance. All of that is now in the program. And as customers requested, we've added worksheets that show you that deduction before you get to the qualified business income used in the simplified and complex worksheets. So if you go into the worksheets for LaCert, Pro Series, Tax Online now, you will see those deductions for your self-employed income before you start getting into the complex worksheets.
Yep, absolutely. So what else is going on, Jim? What else are we hearing? Anything else we want to share with tax pros? I know QBI headlines a lot of this stuff, but I know there's a lot of changes going on in some other areas. So what else can we bring to the table besides QBI updates?
Well, it's a lot of QBI. So one other thing, so we've made some updates to the entity programs. Many of you asked where you have K-1s flowing through an S-Corp or K-1s flowing through a partnership, you needed to see the breakout of all those business activities. So we now have a worksheet in those entity programs that breaks out each business activity, has the name, the EIN, the QBI income, wages, UBIA that you will need in order to calculate the qualified business income deduction by business activity. And by the way, if it's an SSTB, that'll be marked there too.
Yep.
By the way, that'll also flow if you take advantage of those productivity tools to import your K-1 information into the 1040 program. That will flow with that. Okay, so that'll basically populate multiple lines of your box 17 in your K-1 input for your 1040 program.
Yep. And we'll have videos on this as well. We're producing the stuff to make sure you tax pros can see it in product, as well as what Jim and I are talking about today. So again, we will reference these videos for you. We will make sure we can highlight, illustrate inside products so you'll understand exactly what we're talking about inside any one of the 3 of the products that you use here with Intuit.
Yeah. All right, let's talk about real estate.
Cool. What's going on with real estate?
Well, there were a lot. We got a lot of questions about real estate. So IRS did issue a safe harbor notice 2019-07 rule that does provide some safe harbor area that you can use for rental real estate. As we've talked about before, and as the IRS has laid out, rental real estate doesn't by definition qualify as a QBI Section 162 trade or business. However, there are certain situations that you can make it a 162 business. You can always mark the box to declare that it is a 162 business, and then it'll flow through your calculations. So the IRS gave guidance around this safe harbor rule, and if you do use that, what you'll need to do.
He brought paper, everybody, watch out.
This is it. You will need to print out the safe harbor notice, and you'll have to have your taxpayers sign it under penalties of perjury and all kind of, death and all that kind of stuff. They'll need to sign it affirming these things. And let me just read out to you what's required in order to qualify under that safe harbor.
Well, before you read that out, Jim, where can they find this sheet? Where can we get?
That's a great point. We are actually adding this to the program, so it's not there yet.
Oh, good. Okay.
But you should see it probably about next week. You'll get a diagnostic that says you need to print it, sign it, attach it to the e-file. And we should have those in all of our products probably in the next week or so.
Okay.
Again, that's feedback from customers. You've asked for help there, so we're trying to give you everything you need and support you through this tax season with an enormous amount of tax reform.
Sure, absolutely.
But there's a couple things you got to do.
You want to highlight a few things, right?
Yeah, why don't you take the first one there?
Okay. So Part A, separate books and records are maintained to reflect income and expenses for each rental real estate enterprise.
Yeah, so that's new. So most of your rental real estate clients may not keep their own set of books. You'll need to tell them that's a requirement if they're going to be treated as a 162 business for QBI deduction. They're going to have to keep books and records. Great plug here for
QuickBooks Online.
That's right. You could help be an advisor, be that trusted advisor, help them set those books up. And by the way, if you use QuickBooks Online, you can automate a ton of that work. And that also gives you an opportunity to be more involved in their real estate business, help coaching them to really, grow that business. We've actually just created a video about how to set up QuickBooks Online that you can use the locations and set them up to run balance sheets by property and income statement. So even if you got multiple LLCs, you can run them within a single subscription and run out separate balance sheets and P&Ls for each property. And then you've got everything you need. You don't even have to call the client because you can log in through your dashboard, take that information and start preparing their return next year. So that's the first thing you're going to have to do is set up books and records with your client.
Yep. So Part B, it says here, for the tax year, 250 or more hours of rental services are performed.
Yep, so 250 hours, so that's 6 weeks or so. So if your client is qualifying, by doing that much activity, they don't have to keep records on that for 2018, but for 2019 and forward, you need to help them set up a spreadsheet or something, a diary, where they're keeping a log of the hours that they spend on their rental activity, because the log is actually required for the next year for 2019 and forward. So that's a great opportunity for you to lean in as an advisor and really help them set up all the things they need in order to be compliant, in order to get a great deduction. By the way, take credit for saving them money with the deduction.
Show them those savings.
Yeah,
absolutely.
Good opportunity for you.
Yeah. Alrighty, Tax Pros. So that's going to do it for this episode of Tax Pro Talk, or Hashtag TPT. Tune in next time because we'll probably talk a little more about QBI or some other updates that are happening with tax reform this season. But remember to hang in there, and we'll see you again next time here on Tax Pro Talk.